Hello, hello everyone. Yes, I hope you can see me. You can hear my voice. I also see my screen. I'm currently having a screenshot presentation on the screen here. I hope you can see it. The title is Sequence of Events in this webinar. So our topic for today is going to be becoming a professional Forex trader. So I've written here how we are going to look at this. Like, there are a lot of things here which we look at. These are just the sequence. These are the sequence of events that how we are going to conduct this webinar for the day. I will start by first giving you like a histogram of how a professional trader's graph should be. Like how are they trading, like what do they make per trade, what do they lose per trade, and how can you gain something from that. And then there's also characteristics of a professional trader. This is the second one. And then we'll have also the last one where I look at some strategies, just some simple strategies that every professional trader does look at, like whichever they follow in their trading. What do you trade? Are you day trading or you are a swing trader? So there's also the last screenshot here, the last slide, which says characteristics of a professional Forex trader. So here I'll just be looking at some of the things we already know, like discipline. You have to have the desire and the drive to learn how to trade, and then you have to have the patience to wait for trades. Then there's also the understanding that losing is part of the game. Then positive mental attitude. So basically that's what we want to look at today. We have everything on this screen. There's everything. This is the title, and then the sequence of events, what I'll be following, and then the last one, which will be this one, and it is part of the sequence of events. It's the second one. So before I start, I want to mention something here. Just a second. I want to mention here. Sorry, I want to mention here that if you are here and listening to this, you can ask me any question. Just post it under the chat option just below. There's a chat where you can actually be chatting. You can tell me if there's anything you show me. If you have any question, just write it there and then I'll answer it immediately. So currently I'm on a page here. I'm on the main site for Fresh Forex, and the reason I've come here is because there's a bonus here which you can take advantage of. You need to go to the main site. There is no special link for this, and just go to the main site, and then we have a list here. That one, select the first one, bonuses, and then we have the first one here. Then ensure you read everything on this page before you start anything. Even before you think about applying for this bonus, ensure you understand these terms and conditions. So the most important one have been simplified here at the very top. These are the simplest things you need to adhere to first, but you may also want to read all this. There are only 9 clauses, 12 before you eventually click this one, the last option here. So let's move on to what we want to look at today. Just a second. Let's move on to what we want to look at. So we'll start. I'll first show you the histogram, the one I made for. Basically, this is just how my trades look like. We have it here. I hope you can see it. If you can look at it, just tell me if you are able to see this. Show me. So according to this histogram, this I've written the title that histogram of a professional trader's trades. Then I have this line that marks 00, and then the very top is profits, and then you have the lower one which is losses. So from this chart, whatever you're seeing here, this means that anytime this guy loses, like anytime I lose a trade, it's always some small loss. Yeah, I don't lose anything, everything. Like assuming I buy Euro USD, it only goes against me for some few pips and then I'm out of it. But anytime I buy the same Euro USD and it's going my way, I let it run for the longest time possible. The same thing applies to the next one. I buy the same trade and then it goes up, and I don't stop it until my take profit is hit. So this green basically means that take profit has been hit, and then the red one, which is losses, means that stop loss has been hit. So as you can see from this point, this is like some time from where I started. This is the moment I deposited the money. From this point here up to where we are now, you can see the first one was a loss, and then I had a very good trade. Then after that I had another very good trade, and then there's a loss, there's the next loss, and then I had a very good trade also at the same time. So what this means, as from where I am now, where this candle from this one here, this is not candle, this is just from this bar up to where I started, there's been 1, 2, 3, 4 losses with only 2 wins, but the profit is far much better than the losses. So if I lose some round figure, but anytime I win, I get a good trade. Like I will come and buy Euro USD, and then I see what will it do in the longest time possible. It's likely to go up, then I remain long with it. But assuming I buy Euro USD, then I notice that the longest time is short, it's going to go down, then I get out immediately. So this is red. You see the red is small, but anytime the green one occurs, it's bigger relative to the red ones. There's another big green one, there's another big green one, and then there's another big green one, and then there's a loss, then we have a very big one, then another loss, then there's a big one, like that. So from this histogram you can see very well that anytime there's a loss, the loss is limited. Like I don't let it run to reduce my account, to melt down my account. No, I cut it short. But anytime I get a very good trade, I do let it run. And that's why I've written here the secret is simple. Let winning trades continue to win, but cut short losing trades. So what this means is simple. Assuming you're on this chart, this is main chart. Assuming you're looking at Euro USD, the chart where I am now. I just want to show you exactly where I took a trade. Oh, sorry, it should be GBP USD. This is what I did yesterday, how I took this trade yesterday. So the very first thing, avoid looking at a chart that looks like this. You don't have to expand the chart like this to be able to understand what's happening. You need to reduce it. Ensure you are able to see the longest time possible. Like if I expand the chart like this, assuming I have my chart expanded the same way this one is, I'm only able to see what has happened on 23rd back to 29th of October last year. But if I reduce it like this, then I'm able to see even what happened in March last year. So it's better you minimize. Don't analyze the charts when they look like this. Ensure you minimize them so that you're able to see widely. This is the very first thing you need to understand, that I don't look at my charts like this. Rather, I minimize everything so that I'm able to capture the wider picture. From this point here, this is like a duration of close to 1 year. It's enough for me to understand where we are going. So if you listened to us yesterday around 11 Eastern time, we had a line here, and then we mentioned that this was a good support. Price went up, the same support, it went up, the same support, then the same place has been holding, it went up, back to the same place, it went up, back to the same place. So we actually took a buy from this point. When this tail was coming down to this place here, we actually took some buy, because what we expected that the price supposed to close back above this trend line, and indeed that's what happened. Price closed above it, and since we now know that the trend is upwards, I now expand my chart, and then I have this level here. So this is what yesterday we took a trade from this point. We bought exactly when the price was here, and the reason we bought it was simple. You can gauge from not just this trend line, but also this one. It's showing us that price is above them, and therefore as long as the price remains above this level, we expect a move upward. So from the very first one, this one, you can see the price gapped up from this point to this point. There's a gap, then the next candle actually formed a tail. So the next following candle, which is this indecision with a long tail, actually had a tail below, but it closed above. Then this one also went down but closed above. The next one also tried coming back to the same place, but it closed above. Then we saw this red candle followed by this green one, which tried coming back to the same place, but then it closed above. So all this was showing the same thing. All this was showing the same thing, that we are supposed to go up, and therefore only buy is recommended. So assuming you bought it with us here, just a second. Assuming you actually bought it with us here yesterday, if you bought it with us yesterday, then the trend is still upwards. Probably your first take profit was here, and then the next one should be at the very top, which is 1.3134. I'll remove this. It's not clear. I'll get it out. So assuming I bought it while the price was down here, I'll mark also that. Assuming you bought it with us there yesterday while we were buying, you actually also took a buy from this point, and you notice that so far even this candle closed above this level, this is still a buy. So therefore, if you bought it, you're not supposed to exit early. Just let the trade run up to this place here, and then you get out. But in case the price was to go down, assuming I entered then it went below, then I would simply get out there, slightly just below where I entered. I don't want to risk a lot in any trade. It's better to have money in your account and see than not to have money, then you see good setups for trade. So you enter buy at this point, your stop loss should be just slightly below it. And another thing, after you enter trade at this point, the level which I've just marked, if the next day price begins to come down, like it now begins to extend, you see it red, and it's approaching your stop loss or where you entered, don't make the mistake of getting out of that trade. That's the first rule. Like, don't find yourself exiting a trade that's already running. It's better you let it be. Let it come down up to this point and exit you. Let it hit your stop loss. Those are the cases where you see on that histogram, the one that I've just shown, that they are red. And the amount you lose in a trade has to be some round figure. This has to be an average you're losing. Like, you must say that in a trade, the maximum risk is 10%. So that 10% could be $10, $5, whichever, but it has to be some round figure. But for every loss, the amount you win has to be double. I hope that makes some sense. Like, assuming I bought it from this point, I took this buy here, real account, then I had my stop loss here, then somehow price goes down and hits it. The amount I'm risking has to be at least, has to be less than whichever amount I'm expecting to get in a trade. This is the very most important thing. Like, anytime I enter a trade here, the loss has to be some round figure, but profit has to be above the double what I'm losing. So I'll come here, enter trade, and let me put just, let us see. First of all, I'll place a pending, not a real trade, but just for the sake of understanding, 1.2986, 2986. Then I place a pending buy limit, pending buy limit 1.2853. So I hope you can see it. I already have the pending. This is the buy limit here, which is the volume is 1. I have a volume of 1, and then there's the stop loss, and then you have the take profit. So I'm placing this pending here because I've done all analysis, even by minimizing the chart, everything, and all of it is showing me a buy. So assuming you bought it here, your stop loss, which is here, has to be some round figure. Like, if you are risking, assuming average you risk like 500 USD in a trade, if that is possible for you, if you're risking 500, in the next subsequent trades, it has to be 500. Don't find yourself expanding like losses. In this trade, you have 410. In the other trade, you have 300. In the other trade, you have maybe 400. No, it should not be like that. Ensure that the loss is some round figure. If it's 500, let it be around 500 or less than 500. And if the profit is above, then it has to be double the average amount you risk in a trade. Basically, this is how casinos work. Like, for every win, they ensure that all odds are on their side, at least double. So you will get this one correct. It goes for you. You earn how much? You earn around 1330, and then you find the next trade which goes against you, and that one now you loses, maybe it will be 500, and then you get the next best one, and that next best one takes you up to 2000 and something, 2800 and something USD, takes you up to this level. Just a second. The next trade will take you up to 2810. So assuming you are just risking 400, just 400 trade, but for every loss you expect a bigger win, at least 1000 USD, then you'll be good in the long run. And that's, as I've looked at, as I've mentioned here, that's how this histogram was developed. Like for every loss, I had just some round figure I'm losing. I set maybe assume 100 USD. For every trade, I'm just risking 100 USD. Then if it goes correct, then I have to get at least double. Notice, even this one here is not exactly double, but it's like 3/4 of the amount which I risked in this trade, in the previous trades. So this is the first thing, this is the most important thing. Don't find yourself risking much more. And then another thing, assuming you have 1000 USD, like maybe 10,000 USD in your account, don't risk much more than you can lose. Don't find yourself expanding stop losses. Like there's this trade here, we have this one, the main chart, we have this one here. Assuming I bought it a volume of 1, then price then begins to go like against where I bought it from. Never find yourself stretching the stop loss, even if it means it's hitting you. Let's just hit you, but you get out at a small value than risk your entire account. So this one thing you need to practice it, and that falls under discipline. On this thing here, if you can remember here, I mentioned characteristics of a professional trader. The very most important thing is discipline. You have to be disciplined. That's the most important thing. Like if you say that you get like $2 for every trade, but you risk $1 per trade, then it has to be like that. Don't find yourself risking much more than you can lose, and don't lose more than you don't expect to be losing. So like anything is possible. I hope you understand that by now, that anything in Forex is possible. You could be right 100%, but still trade can go against you. That does not mean don't know what you're doing. So the key is to, if I want to lose 10, let it be 10, and if I'm earning 20, let it be 20. So I hope you've understood this screenshot, I mean this histogram, the way it looks. Just a second. I hope you've understood it very well, what I'm trying to say about it. So you can see so far, like the losses are more. 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16. They have 16 losses, but the wins are very few. 1 2 3 4 5 6 7 8 9 10 11 12. Not very few, but they're okay. So just ensure that for every trade, like even if I'd lost here, assuming I'd lost 20 trades, but then I only have 4 winning trades, those 4 should be quality. I hope that should make some sense. So this is also the next one which I've mentioned here, that your strategy must take into account the risk involved in every trade you take. So what that means is simple. Assuming you're doing breakout, you're trading breakout. What breakout means is you find a key level, and when price goes above it or below it, you look for a trade in direction of that break. Something like this. Just a second. Assuming you have a chart like this, I'm trying to explain exactly what breakout is, so you're not confused. This line we had here in the morning, there was a support here. Price went up, came back to the same support, went up, then it came back to the same support, then there's this false break, and then it came down to the same place, went up, then back to the same place. So we actually took a buy from this point. This was a reversal. So if you are trading reversal, then ensure that the amount you are risking in this trade is not more than what you expect to get in that trade. Like your strategy, like maybe you are there to get trades reversals, ensure that whatever you are risking in that trade is not much more than what you expect in that particular trade. Like in this case, maybe I expect price to come from this point here up to the very top, up to 14.16. If this is what you expect, then just ensure that whatever you are risking is not more than that which you expect from that trade. That should be clear now. Like, assuming I have this one, I have a support, a support, a support, there's a break below it, price went above it, then it sat on the same support, went up, came back to the same place. So this is definitely a very good place to buy. But where are you buying up to? If you buy here, then you're supposed to go up to this point. This is the next key place, because we actually took a sell from this point. So your stop loss in this case must not be more than whatever you expect to get, and that which you are risking has to be some round figure. Like if you're risking 10 here, ensure that in the subsequent trades you'll be risking around 10 at least for some times before you increase it. Is that clear? That should be very clear now. It should be very clear. Like, as long as you have this support as a very good buy place, ensure that you are buying in a way that whatever you risk in that trade is not much more than what you expect to get in the same trade. So that is for somebody who is trading reversals. I also mentioned something like breakout. Breakout means assuming you have a level like this, a good support, then price goes below it and remains below it. You wait for price to come back to the same place so that you can pick a sell from that point. So you can see somebody will come at this point and see that, oh, there's a breakout to the lower side, so they want to sell from this point. Selling at this point means that your stop loss has to be here, at least above this point here. If you sell here, where I'm having my mouse pointer at, your stop loss has to be above somewhere here. Then the guy who sells here, their stop loss also has to be at the same place. So you'll find that you are risking double. If you sell here, you'll find yourself risking double more than this person is risking. So the best thing is to only trade when the price is there, and even better if price can try coming back up to some point here. That's how you can sell from. So you'll find on most of my charts I've drawn a zone here. There's this, I've drawn this colored area, there's another colored area, there's another colored area. So these ones are supposed to be below this line. They're supposed to be below, something like that. Then even this is supposed to be below. Then this one also has to be below. The reason I'm putting them below is because I want a place where if I'm to buy it, then I'm not risking much more than I expect to get. Like I have to risk some round figure, and I also need to trade a bigger volume. So the best way to do that is to ensure that you enter such that whatever you're reaching is very less, and also you have the opportunity to place even a bigger volume. So that should make some sense. I hope that should make some sense to you. Like, this is the level, then price has gone below it. Instead of buying while price is here, you wait for price to come back to this place here so that you can pick a sell from this one. So, and even then, assuming the price gets here but don't see any good sign for selling, you don't do anything. Sign for selling could be anything, could be an engulfing candle, could be an inside bar, could be pin bar, could be whichever candle you choose to trade. Like if you are specializing on a pin bar, then wait for that pin bar to happen here so that you can sell it. If you're doing inside bar, then that inside bar has to be around this point so that you sell it. Or assuming you're doing which other candle are there? Like assuming you're just looking for a long bad candle, like when price gets from price is here, then it goes up to this point here, and you see a break above, then the price breaks again below it. That's if that's your trigger thing, then just wait for that one around this level here. Don't wait for it at the bottom. It has to be here, and your stop loss has to be at the next key place here. So assuming you end at this point and trade is going your way, you're making money, assuming you come and enter at this point here, then price goes down, you are 152 pips in money, then it goes down, then somehow it begins to pull back again upwards. The worst thing to do is to pull back your stop loss. Like assuming you see the price going up, then you now stretch your stop loss upwards. I'm telling you from experience, there are chances that even then you're going to be hit, the stop loss is going to be taken out. So it's better to just be stopped with a small money and you get out. Then the next time price does the same thing, you maximize on it, you get the full trade. Is that clear? I hope that should make some little sense. So in other words, what I'm saying is, if you enter a sell at that point, then price goes your way, and somehow, because of some factors you cannot control, the price begins to move against you. Don't find yourself stretching your stop loss upward or even pushing it a peep higher, because in most cases the price will ensure that it comes up to that stop loss. It will still come up until it hits you before it eventually goes down. So how about you just stop with the small money and then you look for the next thing in other chart, maybe at some point. So that should make sense. Whichever strategy you choose to trade, it has to take into account the risk involved, and that's what I'm trying to say. And that risk which is involved, it must not be much more than you expect to lose in a trade. You, like whatever amount you're not comfortable with, you may be having 100 USD in your account. Don't risk more than 20 in a trade. I think that should be okay. That it should have synced in by now. So we now move to the next thing, the next main thing which we'll check here. So that should be part of discipline. That you have to be disciplined. If you have a strategy that is working for you, just ensure you live by it. Ensure you live. Don't shift anything. Don't find yourself changing anything. Then there's one thing which I've not mentioned here, that you have to have the desire and the drive to trade. So there's one thing I read somewhere, that the value you get from anything depends on the time you put on it. Like if you spend just 2 hours checking your charts and how to trade, then you're likely going to get the value of 2 hours. You'll not get more than that. And if you spend time, like you spend a whole day, then you'll get the value worth a day of whatever time you spend. So if you want to know how to trade very well, you have to have the desire and the drive to trade. Ensure you practice. Personally, I still do practice. I still draw charts every day. Like I cannot come to a chart and then there's no day. I literally look at charts every day. Every day you'll find I've drawn levels here in every chart. Even if I've looked at the chart today, like there's this one here, USD, I keep looking at every day, because the market is so dynamic. Anything can happen. You may have a level here for a very good sell, then the next same level tomorrow is used for a buy place. So we don't want to find ourselves buying just because we saw a buy yesterday. You have to check, keep practicing every day, every day, every day. Come to your chart, load these charts, try everything. Just try everything. Ensure you understand everything on the chart. Read these ones clearly. Try drawing. Try to find exactly what this candle means, because the person teaching you maybe, or the person who taught you maybe, did not explain to you what these candles mean. Try finding out what they mean by yourself. Then try understanding what this means, even if like from maybe I've mentioned that this is a pin bar. Ensure at your own free time, find out what's a pin bar, like what does it mean on a chart and when can we use it. Not all pin bars are good, so you need to check that by yourself. You have to have the desire and the drive to learn it. I hope that should make some sense. You don't find yourself, anything I tell you, like anything you hear from me or you hear from whichever source, just ensure you back test it. Try to find out exactly why that person was saying whatever they're saying. If I'm saying this a buy, at your own time find out why was he saying this a buy. So that way you'll be able to understand exactly why I bought it, and maybe in the future you'll get the same setup and then you buy it just the same way I bought it. So there's the next thing here. Just a second. The next most important thing here is patience. So this is everything. This is the most is as important as discipline, because you may have the discipline to enter very good trades, but if you're not patient to wait for them to mature, there's nothing you're doing. You'll find yourself exiting trades that are running, or even not entering trades just because you fear they'll take time. So from my experience, the trades that take the most time to mature always have the most money. Like if your strategy, that is, takes time to give you a trade, the more likely it's useful. I hope that should make some sense. Like, the strategy you have, if it takes time for it to give you a signal, then there are high chances it is successful. But if your strategy gives you trades every now and then you need to question, because not from my own experience, there are trades very well. There are a lot of trades, but trades don't happen every day. Sometimes you can find good trades, sometimes they are bad trades, sometimes the whole day I've not seen any good trade, and sometimes I get good trades 1 week later, sometimes I have several trades on the same day. So you need to be very patient with their strategy. If you have a strategy, whichever strategy you choose to trade, just ensure you wait for it. Like, assuming you do breakout. I like breakout a lot, that's why I keep mentioning it. Assuming you're doing breakout, like in this case, assuming I'm doing breakout and I'm waiting for price to break from either below this level or to break above the upper one. After you see this break, assuming this red candle you find that has closed below 108.37, don't sell it immediately. Wait for it to give you some sign below here. Just wait for it to move, let it do anything, and then if price comes back to the same level and you see that pin bar for a sell, you sell it. Is this clear? Like anytime if you see, you assuming you're doing breakout and you want price to break below this level, sorry, I went silent. So assuming you're doing breakout, then anytime if you're doing breakout, probably waiting for something like this, the price should go down, retrace back to the same place so that you sell it. If this is what you're doing, then don't find yourself selling at the first instant. Like when price goes below this level, don't find yourself selling that's because the price is below that level. You have to have the patience to wait for it to come back up to this level so that you can sell it at that point. And even then, there has to be a signal here that shows you that you're supposed to sell it. So we are not selling anything just because something has shown up on the screen. No, it has to be clear, must have met our strategy, and it must have given us a signal that we are trading that direction. So that falls under the trend, like the overall trend. If I'm doing breakout, it has to be in line with the overall trend. If it's reversal, it has to be in line with the overall trend. That's the most important thing. I've mentioned here on this one here, on this here, I've mentioned it. This one here, which I've mentioned that just a second here, that characteristic should be here. So I've mentioned here that the secret is simple, that your strategy should take trades aligned to the overall long-term trends. So what this means is that if you're seeing a sell on a chart, your strategy shows you a sell, then just by looking, you need to ensure that that sell is in line. There's a sell on the monthly, weekly, and maybe daily chart. You don't just sell because 5 minutes that is showing you a sell. No, it has to be in a line with the longest time frame possible. So this does not mean that whoever is trading 5 minutes is wrong. No, maybe your strategy is 5 minute based. Stick to it. That's another thing. Like assuming I'm trading 5 minutes chart and that's what works for me, stick to that which works for you. Don't change just because you've heard me say no. But the ideal case is when it moves with the overall trend. Is that clear? Like if you have to buy it, then buy the overall. Buy has to be there on the longest time possible, longest time frame possible. And if I have to sell it, then that sell has to be on the longest time frame possible. That's the key. Like these are the simplest thing, but they're everything you need to know. See, because I've learned that most people, they know how to enter trades very well, but because of fear or whichever reason, they just find themselves exiting for no good reason. Like you'll get somebody has entered a buy or a sell, a very good trade, then they exit that trade just before it matures, and maybe like their graph is opposite this one. When there's a loss, they lose. There's this histogram here which I have. Their graph, a losing person, their graph's like this. The red one
is the opposite. It's exactly opposite. You'll find that they've won just a small trade, but the loss is big. They've lost another big one, then the win is very small, very small, very small. So we don't want anything like this. Your graph should be the other way around. Like it should be like this one. If there's a good trade, run it to completion. If there's a trade that doesn't look good, but you feel like taking it, then cut it short when it goes against you. Don't let it run more than you can accommodate. So I think this one should make a bit of sense now, that as a professional trader, we have to cut short our losses very fast. We don't let them run, but if we have trades that are winning, we let them run to completion. Like you buy whichever pair you choose to buy, but let it be up to take profit, and that take profit has to be at least more than double whichever you risk in a trade. So is that correct? That should make some sense now. I hope that should make some sense. So we move to the next thing, which is here. We need to move to the next one. We need to explain this one. Understanding that losing is part of the game. So I hope you already understand this by now, that from the screenshot which I just shown you, you can see that there are cases where I actually took some losses here. Actually I took losses, very good losses. Like in this case I had 4 losing streak, 1 2 3 4 trades that lost. So despite this loss, I still recovered perfectly well. So there are also others, loss. So the reason I'm losing does not mean that I can also win the same way. No, sometimes I do win consecutively, and sometimes I also do lose consecutively. So you find myself I've lost 1 2 3 several trades at the same as a group. So this is possible. You may lose at some time, and at some time also you may find yourself winning a lot. I hope that should make a bit of sense now. So I'm not going to explain this much because it's as simple as that. Move to the next one here, which is positive mental attitude. This is just how you think about your strategy, or maybe the Forex itself. Like you need to understand that Forex is like any other entrepreneurial business. Like you can invest and lose money, it's true. You can also invest and make very good money. Either way, you need to understand that positive mental attitude is everything. Like it's not entirely everything, but it is one of the things that if you understand very well, you'll make money. It's like any other business. It's a second. Like it's like any other business you've attempted out there, starting any business. Forex is just the same thing. All you need a very good strategy, and you need to have the discipline and patience and the desire and drive to achieve your goals in Forex. So that one falls under this one. So I mentioned here that I was supposed to look at day trading and swing trading, but I don't think I'm going to look at it. I'm just going to look at just an overview of what they mean, but I'm not going to expand so much on it, expand on them. So day trading, from the word day, means whoever trades as a job. Like assuming you're doing Forex as a daily job, you have to wake up every day, you have maybe some office somewhere, so every day you wake up and put a trade, every day you wake up and so that's called day trading. You trade every day. Then there's another one which I've not written here, it's called position trading. There's also another one which is called scalping. So I've not mentioned scalping because personally I used to do scalping at the beginning, but not anymore. Nowadays I'd rather do day trading or swing trading, or whatever is called position trading. So all of them just mean the same thing. Day trading is that guy who trades intraday, like at the end of the day they're supposed to see the results. Swing trading, trades could be running for up to a week. Then position trading are those guys who trade yearly basis, like you can place a trade today and check in the next time you check is 2020. So that is called position trading. I've not mentioned those ones here, but there are also some things you need to know. So as a professional, you may trade day trading, which is okay. You may also trade this one, which is okay, or you may trade also scalping, so it's a good one. So depending on your strategy, the strategy you choose to trade, just ensure that it meets this criteria. Like ensure that it meets these 3 criteria, the ones I mentioned here. It meets this one. it has to be allowing you to let trades that are winning continue to win, and then it has to take into account the risk involved in every trade. Then the next most important thing, it must be giving you trades that are in line with the longest time frame possible. So what this means is, if assuming you take a trade, your strategy tells you you're supposed to buy, then that buy has to be there in the longest time frame possible. Like, it has to be a buy. The overall trend in that particular chart has to be upwards for you to buy anything. Don't be counter trading. Like this one. Just a second, I load this chart. Assuming I'm looking at this chart, so I took a buy at this point, and I noticed that while there was a buy here, somebody else was possibly seeing a sell. So if you want to, your strategy shows you a sell in this case, then it may not be serving you well. Like, a good strategy must be in line with the longest time frame. It has, if the overall trend is upward, then my strategy has to be showing me that you're supposed to be looking for a buy, especially a buy, not a sell. So you find a strategy that this is showing you a sell while the trend is upwards, you don't do anything. It's better you look for a better strategy. So there are also things that can help you get the trend here. They're just indicators here. Assuming you cannot read price action, there are indicators for trend here. Just a second, we have insert indicators, and then there's the trend. So all these, the first one, this is a trend indicator, it shows you the trend. We also have the next one here. Bollinger Bands is also a trend indicator. You can also use them if you understand how they work properly. Then there are also others here, trend, and then this envelopes, this is a trend indicator. So there are several, there are a lot of tools you can use to know the trend. If you don't understand the trend very well, then you may just insert one of these indicators. To get them, go to insert and then indicators and then trend indicators, and be able to get all the indicators that you can use on any chart. So I believe we've looked at a lot for today. We've covered everything I think that we had for today. We've looked at this histogram of a professional trader, how your trade how your chart is supposed to look at. If you have to do a histogram today, would it look like this? That's the question you need to ask yourself. Would it look like this one, the one I'm having on this chart? Like, will you be having trades? If you have a trade winning, will they be winning a lot and small losses, or will you be having the opposite of this one? And then, is your strategy taking into account the risk involved? I've tried to explain that. And the next one, is your strategy giving you trades that are aligned with the longest time frame possible? So if all these are met by your strategy, then it's probably a good one. You need to develop it even better. So I mentioned something from the beginning. I want to repeat it just before we leave. I mentioned that in case you are listening to this one, or you heard of this one from whichever media you're choosing, or you are listening now, then go to the main site, Fresh Forex main site here, and then there's the bonus option, deposit bonus 200%. So I know you're wondering probably why I keep mentioning this, and it's because somebody asked me exactly how they can go about it. That's what I'm trying to do, just to explain how you can get up to this bonus. How can you get it? Go to the main site, bonus, and then deposit bonus. So there are no special links. If you can see there, I don't have any special links for this one. You just need to go to the main site and then ensure you read this one properly, understand all the terms and conditions involved. Understand all this properly. Ensure you understand everything on this page before you eventually decide to apply for the bonus. So the bonus still runs up to 28th of next month. That we still have some, like a good month, 1 month to go. So thank you. I hope to see you again tomorrow in the morning. Thank you very much. Have a good evening.